Good morning, guys. How are we all doing? I am Dan from Trading with Dan. This is our Bitcoin morning update. So if you guys wouldn't mind smashing that like button, we shall go straight over to those Bitcoin 4-hour charts. So welcome to stage 3, everybody. Stage 1 was they ignore us. Stage 2 was they laugh at us. And stage 3 is they fight us. So we are currently in quite clearly in the stage 3 where finance 1.0, particularly the US, seen as it has its exorbitant privilege over the current financial system, are basically fighting us. So here we find ourselves. So yeah, that all being said though, we are still holding in and around 20,000 at present, which is not too bad considering our lows are comfortably a good fair few percent below. That is not to say we're not going to get down there, but we still it would still be a 20% drop from where we are now to reach those lows. So we do have some breathing room anyway. What I would like to do is, we have obviously come down into this support here, and what I would like to do is actually extend this whole support area here now down to basically what was a major level to the upside, if you will recall, when I was doing more frequent videos down here. It was obviously getting above and regaining 18.5, and then things would look pretty good for a run deep into the, well, I say deep into the 20Ks towards 30K. I mean, halfway is deep into, I guess, just over halfway. But yeah, we did get a big run, and now we are back testing into this area. So this area is obviously quite wide. Not to say that we can't just cut straight through it in one day, but but we have come down pretty far pretty quick. A lot of FUD has been thrown at the market in recent weeks, I guess, and this, we have still got this large area of historic price action here to potentially support us. So yeah, very basically below 18,500, we have to entertain the fact that it is more likely than not that we would take out these lows and trade to new lows. Obviously, if it's a higher time frame close, if we trade lower, we wick below, close back above 18,500. That's not to say we will have to cascade straight downwards, but yeah, if we do start to consolidate below 18,500, then yeah, new lows will be the most likely scenario. That being said, we have this nice low down here, we have these highs, and then if we print a nice higher low in this area, anywhere above 18,500, even if we just come down, trade sideways like we did here for a bit, and then trade back up, things will not be looking too bad. So stock markets, regular markets, finance 1.0 markets not having a great time either. As you can see, we are moving back down towards this important level. Obviously we've got a low here that we practically tagged now, but yeah, then also this downward sloping trend line also. So there is plenty of support not too far away in the stock market. What I do think is of most note here is as ever this 10-year. It did have a pretty epic squeeze to the upside. The yield did, so i.e. the bonds sold off. We didn't manage to consolidate and hold above this pretty important level of resistance, and we have now started to trade quite a bit below. So if we are now to take another leg down, this is at least indicating that the more recent concern of more rate hikes and also held for longer we could start to shift that sentiment now, and yeah, and that would clearly be bullish, ironically be bullish for risk assets, seen as everything is correlated at the moment. Oil not doing too much, just trading sideways within the range that we kind of expect it to trade sideways in. The DXY though, a bit more trouble in the DXY, as you can see. Sorry, as we had the bounce exactly where we expected. We wanted to firstly get rejected here, and if not, get rejected here. So at present, we have not traded above it. We traded into it. Again, a slight rejection. We can't really call this a significant rejection though at the moment. This could just be a consolidation before we do slice back above it. But if we are to reverse this anywhere around here, then it is not looking too bad. If we get back above here, then I mean there is still be serious problems again, and then we'll be looking at that squeeze higher. But do I expect the powers that be behind the curtains to allow us to trade comfortably into this area again? I wouldn't have thought so, but then again, stranger things have happened. So we shall see. Bitcoin dominance, interestingly, Bitcoin dominance in the face of what is going on, did have a pretty significant leg down into support, where it is now having a pretty decent bounce off it, as you can see. So I mean, Bitcoin went first. Then obviously the alts are trying to follow now, i.e. the Bitcoin dominance returning back to where it was. But yeah, I mean, Bitcoin is obviously the main asset in this space. Obviously, other coins are high risk. However, if Finance 1.0 people are throwing Boomer coin out the window, it's Boomer coin that they have. And alts have taken a pretty spectacular beating, with obviously a move from dominance from down here to up here, and we're still in and around the highs. So how much more of these bag holders? I for one personally know that you hold certain altcoins, then you just forget about it, you just hold them and hope that like next bull run they do 100x or something. So what I'm saying is there is maybe not too much more selling in certain altcoins. Obviously we've got Ethereum FUD, we've got Ethereum being a security FUD, again just part of the fighters stage. So that is only to be expected. What else? Yeah, obviously we know about the US government selling its Silk Road Bitcoin. I mean, it obviously wanted to wait until a point in time when Bitcoin looked particularly weak and particularly low. It didn't fancy selling them at $50,000 plus dollars a coin. It wants to sell them now at nearer $20,000 a coin. I mean, that clearly tells you what their motives are. So yeah, what else? Ethereum USD. Let's have a look a bit of a more uglier chart. Ethereum USD, as you can see, still got plenty of room before it even starts to enter basically that same area that Bitcoin is entering, which would be this price action area down here. Still got more room to go. I mean, if we look at the Ethereum Satoshi pair, and you can see that, then there's obviously, this won't be the most bearish looking chart. However, it is attempting to play catch up at the moment. But yeah, still quite a ways away from losing this level. We lose this level, then it is curtains. But as much as the FUD surrounding Ethereum is, I personally, as a non-Bitcoiner, a non-Bitcoin maxi, see the FUD around Bitcoin being quite more substantial. The fact that they have a pointless payment network that's going to have a reduction in its security level, seen as there are very many transactions on it, and its price isn't appreciating quick enough to then give the miners the rewards they need in the price. If they're not going to be getting the same amount of block rewards after each successive halvening. What else? Yeah, we'll have a quick look at gold. Gold is still below its bull bear mark. Did try to trade into it. Is trying to trade into it again. So it is putting up a fight here, which is good to see. I mean, like I said, everything is correlated. We want gold up as well. We want stocks up. We want bonds up. I.e. yields down. I guess we don't want the dollar up, but that's a relative trade. So we basically want everything up against the dollar. Other currencies up against the dollar. But yeah. Gold below the bull bear mark, so he has got work to do. However, at the moment, it is clearly struggling. What else? Oh, those good old stochastics. Not looked at them a while. 4-hour game pretty beaten up here. Not that we look too much at 4-hour. 12-hour though, similar story. Pretty beaten down here. We will expect a bounce, and to be fair, where we are is a good a place as any, but we shall see. Daily also very low down here. bullish reset. We've had a bullish reset. 2-day very low also here. 3-day still actually has room to run though. 5-day has all the part to run in. So weekly is not a very good read on the weekly. However, if we can offset that with bi-weekly and monthly, and then of these lower time frames, maybe we can combat this bad 5-day and weekly read. But yeah, realistically speaking, we have come a long way. We have come a decent distance pretty quickly. I mean, you can look at this chart, obviously our new little area that we've extended below. You can look at this chart, and it isn't necessarily the worst. This does still look constructive. It looks constructive until it doesn't, and it doesn't is obviously once we start to trade lower down here. But holding this area, this does look like we have. Even if we haven't put the bottom in and we do somehow get down here, trade below, whip back up, trade slightly lower, and then hold, I'm not completely capitulate to the next level, which in all fairness is around 13,000 to 10,000. It still looks relatively constructive. We have we have been through an extensive, most aggressive ever interest rate hiking cycle that at present people are not expecting to end anytime soon. However, it may do, and that sentiment may start to change pretty quickly. Yeah, I mean, we are not looking too bad. It is looking like we are trying to put a bottom here, and obviously we are looking at a 5-day here. We're looking at a weekly, going to look pretty similar. We'll look at a daily, just to extend this. Just let's get this. What I'm trying to do. Yeah, I mean, obviously just ignore the lines, but again, you can see this is still not looking too bad here. So yeah, let's see if they have any more salvos to throw at us. We have got to the point, in my opinion, that the destruction that they're trying to cause to a lot of crypto banks. Those crypto banks are not solely crypto banks, so they are gonna trigger a wider banking crisis if they're not too careful. So I don't know how much more they realistically think they can push that, which means that they could maybe start to ease off that, or like I said, maybe the Fed obviously isn't in control of just going a slightly off topic here, isn't as in control of like the euro-dollar market, the actual creation of dollars globally. The Fed is not in control of a lot of things, and one of those things is how much other entities, people, banking systems, shadow banking systems, how much of the system is involved in crypto, because it's still a relatively decent sized market. So at the margins, they may start to realise they're pulling out their own wool. They are unraveling their own jumper if they carry on, and at which point they may have to maybe rethink their policy, because yeah, whilst choke point 1.0 was against like tobacco and gambling, and that's all fine and dandy. They are now attacking choke point 2.0. You're attacking what potentially is the future of finance, the beginnings of the future of finance, and that is obviously gonna have bigger ramifications than stopping people playing online poker, for example. But yeah, that is it, guys. A video as requested. But yeah, good to speak to you guys. I should be doing more content. Basically, I have a new computer, I have a new setup, I have a new camera. I just kind of need to get around to setting that up, and then doing more videos. It's just these computers aren't the best, and it's just like I said, I have new equipment, and I'm realistically just waiting to set it up and get going. So that is it, guys. Remember, this is not financial advice. I'm not a financial advisor. Always do your own research, and I shall speak to you guys soon.